Hey guys, Ben Nash from Pivot Wealth here, and today I'm pumped to be here with one of our southern clients, Luke. Luke has been working with us for a little while, and I'm keen to unpack a bit of your journey, Luke. Talk about some of the things that you were thinking when we first started chatting. You kicked a whole bunch of butt in that time, so keen to unpack that and help others learn from some of the things that you learn along the way. Thanks, mate, for taking the time. Really appreciate you being here.
Yeah, no problem at all, Ben. Thanks again. Good to be able to chat.
Nice one. Well, look, I think as a starting point, maybe you could tell us a bit about how life was for you when we first started talking, thinking like depths of COVID, after COVID bounced last year, and what was going on for you at that time.
Yeah, most definitely. Look, I guess, it's sort of something we've been thinking about for a while. And, for disclosure, I previously had some financial advice, and, I guess that was a fairly poor experience with the previous advice, and ended up resulting in, I think, an 80 odd page statement of advice or dossier that probably wasn't worth the paper it was written on, to be fair. But lessons learned, and really, I was committed to that process, but really didn't sort of see any results as a rule from that. And I was a bit sort of disillusioned with that, and that was always sort of interest. And then wanted to take a good sort of hard look at what we were doing, and had been sort of semi-successful in terms of property investment and stuff in the past, and having, I guess, a fairly high demanding career, and that it was, we had sort of a situation where, we're in an okay position, but I guess, we had probably a bit of paralysis in terms of making further decisions. And as you say, COVID impacted. Partner ended up losing, her initial role as a result of that in the short term. So there was a bit of fear and stuff that crept in as well. But I guess it really came down to just wanting to make sure that, we made the right decisions moving forward, and ultimately had the right advice to back that sort of stuff up. And I've hand on heart, certainly good at what I do, but not necessarily the best in the past at managing our finances. And it was really time to take a good hard look at that. And obviously, I guess, like a lot of people, was probably guilty of overspending quite a bit in terms of lifestyle, and looking at, albeit, thoroughly enjoyed and still do when it permits, the travel component, like most. We certainly, done a lot of trips and stuff. And I guess, we're spending a lot more money in that and that sort of lifestyle areas, and not necessarily putting away or making any progress in terms of that sort of financial, toward those financial goals. So, it very much came down to, the catalyst of right, okay, well, we needed to do something. What did that look like? And I think we'd sort of spoken probably about a year before I think I engaged your services at Pivot and that, Ben. And it took probably fair to say it took a little while for me to take the leap of faith, and finally sort of glad I did it. And look, to be fair, that was, it very much came down to obviously the reputation of yourself and Pivot, and also word of mouth. I knew one of your previous clients, and had a really good chat to them, and look, they obviously, everything, I couldn't speak highly enough, and it has been been a great result for us to date. And as you say, we've kicked some pretty big goals, made some pretty big decisions over the course of the last 12 months, and all throughout COVID. So pretty happy with the current state of play.
Yeah, absolutely. And I'm keen to chat a bit more about some of those results and things, but interested to pick up on one of the things that you mentioned around you because you did have a bunch of stuff going on already, like some investments and some things that, property was already part of your plan, but then you've gone out and you've sought out advice in the past, and then still got this on the radar. So I'm keen to understand, like, what were the gaps? Like, what was because sometimes I think people can fall into that maybe the myth of thinking, well, it's just easy, so it should be fine and everything's okay. But what were the challenges or frustrations or gaps that made you feel like you needed to be seeking out someone to support you with this stuff?
Yeah, I guess it really came down to, it was probably needed a bit more accountability, or to take a bit more accountability at the same time. And I think this exercise has really, proven that is a key thing that's been a major part of what we've done and the results that we've seen. I guess, there was no real clear strategy, and I think that was very sort of lacking. And aside from that as well, I probably made decisions and they weren't necessarily the right decisions, and that came down to things like finance structure and all of that, and ended up sort of running into a situation where we'd been in a position where it was like, okay, well, not necessarily taking the right financial structure and that sort of that investment and that kind of thing. And so there was a bit of that, and there was also other things that looking at it going, okay, well, what do we do outside of property? And I didn't really have a great understanding of the share market as such, and managed funds and all of that side of things. And I, albeit probably had a bit of visibility on the superannuation front. Again, had been with, off recommendation from the previous advice, went with a super provider that really saw, quite a considerable loss over the course of the time. So it was really just fine tuning and getting things right moving forward, and making sure that we had the strategy, and I guess B, that we ultimately were making the right decisions and had the right structure in place.
Yeah, and there was definitely a little bit of untangling to do with those things. It's amazing. Like, you had a lot of good stuff happening, but sometimes it's the little things that can seem almost insignificant at the time that you, when you look back, and as your money knowledge and approach this stuff builds over time, then there is the opportunity to refine and improve, which is great to see it coming together for you now. I'm keen though, you mentioned, I'm keen to understand your thoughts on what made the difference, because you mentioned that you've gone through the process before with a different financial advice business, and it didn't have the impact that you wanted. Our documents are a little bit shorter, but unfortunately in the lovely land of financial services and financial advice compliance, there is still a fair bit of detail that needs to go into those things. But also, you've clearly, a lot of stuff has happened in the last only 12 months. Apart from my hilarious jokes, of course, what is it that you see as the difference? What moved the dial to between those two approaches to planning?
Yeah, I guess, fair to say probably one of the things as well was I'd sort of sat on the fence a while, but I'd also watched, been involved in attending a lot of the webinars and stuff that you've been doing, and I appreciate you guys put out a lot of free content, which is really quite valuable. And that sort of was like, okay, well, all of that stuff that I'd started to pick up was like, okay, well, that's great, and this is awesome information, but I really need to refine it. And that was really the I guess the catalyst, and making sure, okay, well, hey, it's time to engage. It's time to do something about it. And look, yes, there is quite a bit of detail that went into it, and I think to some people that process can be a bit overwhelming, myself included, and just trying to get all of that information. But at the same point in time, I think, if you're going to take it seriously, you've got to be accountable, and you got to make sure that you're prepared to put in the effort. I mean, if you're going to spend the money, and it's fair to say it's never a cheap exercise doing this sort of stuff, but ultimately I'm a believer in I guess if you're going to try and achieve that end goal, that you've got to be able to spend the time and money to be able to do it. And that was it. Once we sort of really engaged and went through that process and got everything set up. And I've obviously recently just moved over to that My Prosperity app as well, which is great in terms of the reporting and stuff. And again, even throughout our journey, I guess that was part that I'd sort of, I don't need that because I'm using another application, and that's sort of giving me the visibility over what I want. But it's a hell of a lot easier, and we'll be moving.
You just muted yourself. Oh. Sorry, I don't know how that happened. You were just talking and then it went on mute. You can just pick up from that comment. You said you were just before it cut out, you're saying it will be, the visibility will make it easier moving forward.
Yeah, the visibility will certainly make it easier moving forward, and with the reporting and and I guess when I talk about the visibility, it's the visibility that you guys have over the current sort of financial position that we have at the moment, and being able to go into those regular catch-ups, which as well have been really valuable. And at the same point in time, I think that is very much, we talk about accountability. I think the relationship with Pivot's been great in the sense that it's accountability on both sides. And that's proved to be really valuable because, I have those regular catch-ups in place, and we've made a lot of really big decisions over the course of the last 12 months, and I've needed the advice, and I've needed to make sure, hey, right, is this going to be the right move? And having those sort of catch-ups and that in place has been, a bit of a game changer when it came to just running through that and sort of looking at how it impacts the current position versus the future position in terms of, the investment, the different styles of investments that we've made. And certainly there's been a few, but yeah, I mean, that's been a sort of a key part of it as well. It's been great.
Yeah, I think it's really hard if you're trying to figure it all out on your own. I know for me, when I'm, trying to work on we've been doing our wills recently, just updating the wills, and I know that the questions come back, and I'm like looking at this document going, bloody hell, like what does all this stuff mean? And then it's like, well, I don't really know enough. And then it's important, enough to know that it's important, and you don't want to get it wrong. But then it sits on the list for like, a week, and then you're like, dragging the chain, and things just take longer. And, when you apply that to investments and markets, and especially around the time that we're talking, when everything was moving so quickly, that's costly, those delays. And I think that it's good to have that point in the, that note in the diary that you go, okay, I know that that's coming up. And one, I can get the questions answered, but two, that it's going to push you to take action and do that. But what do you think though? Like the accountability is clearly something that's been beneficial, and having that frequency around supporting the decisions that you're making. But given the amount of stuff that's happened, like the action that was taken and the results that you got in the last 12 months, compared to, you mentioned that you didn't get the same outcome when you went through the planning process before. What do you think is, like, what was the key difference that's resulted in such a massive uplift in action and results?
I guess it was just having the confidence after getting on board with you guys, and really getting a better understanding of A, the position that we're in, but B, where we wanted to be, and looking at, that financial projection piece that you guys do is obviously invaluable, and just being able to reset those sort of goals and expectations on a regular basis to make sure everything's sort of in line with what we're trying to achieve is awesome. So I guess it's given us the confidence to really sort of make a lot of those decisions, and as you say, take action. I guess I've found that part has been from day one, and getting all of this in place has been the greatest value.
Yeah, it always surprises me, and I totally get that we're have the advantage of having seen hundreds of people go through that modeling, like the financial projections in a really granular way before, but it blows me away when we do it, how people make such big decisions without doing that. Because it's like, I was literally just having a conversation with another client, and they wanted to do a really big reno on their property, and everyone knows how that's going to make them feel. You go and drop 7 figures rebuilding your house, you go, that's like, I'm going to have a mad kitchen, might get one of those heated toilet seats, like all of the things there. And But when you look at the numbers, you go, well, actually, that's causing a big trade-off around these things, and it means that we feel like we need to work for X longer years.
Yeah.
That then you go, oh, well, that makes me feel a different way. And it's only really, there's no right or wrong there. It's really just what's right for you. But it's balancing those two, how we feel about stuff, and then what the numbers tell us. It's only really then that you can choose the path which is actually the best one for you.
Well, to a certain extent, I guess it takes the emotion out of it, and that's what I found. Like, I think one of the things coming into this as well, like I've always been right into, I had the mindset of, okay, got to have the nice car and all of that, and then when you really start to look at it, and yes, okay, with COVID, you're not hardly leaving the house, so it's not necessarily a great thing to have a car sitting there that you're paying 20 odd K a year for, and that was a big thing. Like, just coming into it, I think literally the month after my lease was up, and I was like, well, I don't need it. My partner and I will share a car, and why not? And that's okay. So, but then looking at where that money was now able to go into investment, and that's exactly what we've done. We've set up the managed fund off your recommendation, and started to plow money into that, and that's just seeing that sort of trajectory growth of that over the course of the last 12 months has been great change. And do I miss having the nice car? Well, yeah, certainly not at all. And maybe that might change in the future, but back to the short-term pain for long-term gain, and maybe having that again in the future when we've bought all that. We've got the upside from the investment that we've made over the course of the term. So that is a big change as well. And I one of the other key things as well is having access to that savings planner. So I use that religiously now, and it's like those ebbs and sort of flows that you have, and being able to actually adjust that, and when you've got sort of, whether it be changes in your financial situation, whether it be pay increases or decreases for that matter, or anything, any little thing, whether it be cancelling a gym membership, or you start to look at it a little bit more holistically to go, well, okay, I adjust that, well, now that changes, and then it's the automation that you guys have put in place behind it as well, around the stuff with the banking setup and that, and being able to adjust those. And I have, on a number of occasions, I've gone and adjusted that and gone, okay, well, I don't necessarily need to be spending that, and I might want to put that into savings or the offset or managed fund. And it's having that sort of visibility to be able to do that and be comfortable with that, as opposed to, I don't know whether or not that's the right move, and that the sponsor is what's going to be the impact of that long term. But you certainly start to look at it a little bit. It changes your perspective, and you start to look at it and say, well, okay, based on this, and I'm a lot more conscious of that sort of thing now, and it probably cuts down some of the spending. So yeah,
definitely. Yeah, I think that the clarity piece is the first step, right? Like, it's hard to know and make confident decisions or take action or change course or, improve what you're doing if you don't start from a place where at least you've got visibility and know where things are. And it's really just about prioritization, all of this stuff, whether you're talking about how the different ways that you can invest or the different things that you can allocate your money to. It's like, you can prioritize the car, and for some people that is the one of the highest priorities. For others it's travel, for others it's spending, for others it's looking after family members or giving back to other causes that they care about. For most people it's some combination of all of those things, but it's just like where they fit. But I have to say, you've made a pretty good choice, given that you're coming up to like 250 days in lockdown, to ditch the expensive car and reprioritize some of the other things over the last little bit. It's it's good on a timing front. But
I was lucky. It was certainly coincided with the lease ending as well, and it was just, hey, look, it was the right decision, and it's been great. And certainly, I think the banks look at you a lot more favourably when you're trying to borrow money for investment property if you don't have that sort of liability sitting on your balance sheet as well. So that's been quite positive.
That's right. And I think when you look at, do we invest in inverted commas in this, essentially a liability in the car versus what does it mean for your ability to invest into other assets like property or shares or managed funds or whatever to drive growth? Then you, again, without that clarity of the impact, you're just doing stuff going, yeah, of course, everyone wants to have a sweet car. But then you go, well, what am I deprioritizing to push that up my priorities list? And it's really depends on your situation, but sometimes there's some, the right move at the wrong time is the wrong move. So it's all about those little things that make a big difference over time, and getting the foundations there to build that momentum. Then you can take your foot off the pedal and reprioritize and put more to the balance of the personal, the things that you enjoy, and not that we don't enjoy saving and investing and stuff, but balance that lifestyle versus wealth building and assets over time.
I think one of the things as well is albeit it's given us that visibility, it's not that you sort of can't do it all either. It's like we've got the lifestyle account, set up, and there's then the spending and fixed and all of that. And the automation is just, we've still got the travel fund. Like we can basically put money into that. We've got money going to that constantly. And yeah, we're not traveling at the moment, but that's sort of going up and up. And we've managed to get away when the bubble opened up for between New Zealand and Australia for a very short time. And hey, that was a holiday in a while. And the money was there without necessarily tapping into anything in relation to your offset or taking out of any other investment. So having all of that in place as well has been, I'm constantly telling my partner, and we talk about it. It's like, okay, well, yeah, by the end of the year, if we're able to travel internationally, well, that's there to be able to do that. And yeah, it's certainly something you can just fine tune all of those little sort of those buckets of where you want your funds to go, and help you work toward the main goals at the same time.
Absolutely. And know that you're doing it. You can do it guilt-free because you've ticked all of those other boxes. Yeah. So it's not like you're robbing from your future self to enjoy yourself today. It's that you've chosen a balance and then you're working to your balance, which is good to see. Luke, though, you mentioned that you started following along. We had a chat about a couple of years ago, and then you ended up sort of on the fence, not moving it forward at that time. Then we started talking about a year later, just bouncing out the back of COVID. We talked at that time, and I know even then you sort of laboring over the decision, obviously wanting to make sure that you're making the right one for you, but that process took a little bit of time. And now fully get that there is that element of leap of faith when you don't know exactly what the outcome of the planning process is, which is totally the whole point of having a solid planning process to begin with. But looking back on that now and the history there, what would your tips be for someone else that was in a similar position or struggling with the same sort of that taking the leap?
Yeah, the main thing would be just really, I was really quite time poor, and that was one of the things ultimately holding me back. And then it was the thing in your brain going, okay, well, it's going to cost me quite a bit of money to go ahead and do it. Well, I can tell you right now that it's absolutely been a tenfold return, and that's without a word of a lie. It's been a huge result, and the decisions that we've made in that over the course of the last 12 months, it's been a major impact for us moving forward, and I can see what that looks like for us in our future now, and where we want to get to, and that's been an absolute game changer. Like I couldn't recommend you guys enough for that. And yeah, you've got to take accountability on your side, and if you're serious about doing it, and you're serious about obviously your money, and you're in a good position career wise, and able to make the right investments, then it's something you need to do. It's as simple as that. And I was never really that great with money and my finances, and that's sort of just those learnings and that have come out of it, and are still coming out of it. Like I'm still learning. We have our regular catch-ups, and I'm talking to you about cryptocurrency. I'm talking to you about ETFs, and and seeing stuff around employee share option schemes, and it's all of that constant sort of learning that's enabling us to start to look at the strategy might change. It might sort of, there might be certain things we cut back on, or certain things we go a bit harder on, but it's certainly I think it's allowed us to get to that stage where we're comfortable and confident to make those decisions, and we've got stability. We've also got the ability to invest in some maybe riskier stuff, but not necessarily too riskier, and to keep us in check by having those conversations with you guys to say, hey, what do you think of this? And it's just getting a different view on it, and maybe, okay, well, that's not necessarily the right thing to do. But, first and foremost, just go ahead and do it. It's it might take a bit to set the whole process and the automation and everything up, but once it is set up, you just don't have to think about it. And that's been I take everything a lot more, finance and that just a lot more seriously now, and at the same time, I just don't have to worry about it. It's been it's been a great result.
Nice. And it's so good to see. I think it's hard, you get that our process is fairly hands-on and involved. And even like you mentioned that it's over a 12-month, you're still constantly learning, that it's hard to take it all in all at once, because there are a lot of moving parts there. And we don't, we want people to make sure that they understand what they're doing well enough to confidently put it into place. But we also get that there's only so much you can take in at once, and there's been a big uplift, and there always is for when we go take people through the process and then work with them beyond that. But I can only imagine that when you're trying to figure it all out yourself, and you don't even have someone as that sounding board to say, okay, here are the most important things that you need to know, and how to figure out what the top 2 or 3 options are that you should be thinking about, and which 2 or 3 you should definitely avoid, to narrow down that field to make it a bit easier to make decisions. It's there's a lot of different dynamics and moving parts, and I think it's that psychology and fear of doing the wrong thing that does lead to a bit of that paralysis. So I think that education is really key. Luke, we've done a bunch of stuff together over the last little bit. What would you say are the top sort of 2 or 3 things that you think have been the most impactful for you?
Great question. I think, and there certainly has been a number of things that we've done over the course of 12 months and are still doing. As you know, we're sort of going through that exercise and reviewing current sort of financial projections and everything at the moment as well, which is great. I think part of the biggest thing was, we've started getting an understanding of the share market. We set up a managed fund, and I had that sort of automation going into that. We started to look at, okay, with the current sort of financial structure of property portfolio and all that kind of thing, and agreed that wasn't necessarily the right structure. And we've managed to go through, obviously, with leveraging your network of expertise, and obviously shout out to Marcus at Brighter Finance to be able to actually go through that exercise and align with the structure of our mortgages and investment properties with our ultimate goals in terms of the financial projection that you guys put together. So that's been huge. We ended up purchasing another investment property late last year, and just in the process of going through that exercise at the moment to do for another one. Look, that is very much okay, and we've brought that goal forward as a result, based on the current sort of financial plan, and hence the stuff that we're obviously reviewing and that with you at the moment is how that impacts the plan and the current goal, and just keeping that in check to making sure it's like the right decision. But like anything, it's try and make hay while the sun shines, so to speak, and keep moving. And outside of that as well, we've what else have we done? We invested in a bit of a riskier, not necessarily a riskier situation, but we made a fairly significant investment into a startup in New Zealand that's going great guns at the moment, and looking like that could be an absolute winner moving forward. But there's obviously always risk associated with that. But again, having the visibility of what our current position was and where we were sort of heading, and with everything else being on track, it felt like it was the right decision. So that's been a big thing there as well. What else? The super restructuring, the super thing, and obviously off the back of COVID, seeing that huge dip, around March last year, and how it impacted. And as we all know, like, it's all sort of started to come back, and there's always volatility in the markets. But I guess having previously been with a provider that wasn't necessarily getting great returns, it's been a good result, really good result with the new structure, and also having a closer look at things like, okay, topping up the super to the maximum amount and what that does sort of moving forward, and how that impacts the future of the superannuation fund and that kind of thing, and stuff that you probably don't, well, certainly prior to, didn't really take that seriously. And just getting that sort of visibility has been great, and going through that exercise. So so we've done that. It's still, there's still a lot of moving parts. It's my partner's under a ESOP arrangement with her new role, and our company's just recently listed on the UK London Stock Exchange. So I mean, there's opportunities in the future in and around that sort of stuff, and it's just, I mean, there's been a lot going on, and it's been really great to have the advice and go through the exercise with you guys on a regular basis, just to make sure that we're on track.
Oh yeah, I think the big things are obviously big, but then it's all the combination of all of the little things that leads to that, just that peace of mind that it's not like you probably rattled off 8 or 9 things there that, in the absence of being fully on the front foot, you go, shit, there's 2 things I've done really well, and there's 4 things that I haven't done, and there's 2 things that I just don't know how to do. That, again, it's just like that mental baggage that you carry. So it's people think, I think, as everyone gets a paycheck into their bank account every month, that money should be something that just is easy. But because everything's so specialized, it's like there's so many things to think about, and it's the power of all of those things together that is what builds that serious momentum. So good to have it all heading in the same direction. Luke, what do you think, what would be different in your life now if you went it alone?
I think the fear component would be and that's always been that, okay, I'll just sit on the fence about that. And look, I've done that with by having a great knowledge of the share market. It's certainly, I've got a bit of visibility and understanding of it now, and woulda, shoulda, coulda at certain times. If I'd been a little bit more confident around making some of those decisions, I would have maybe made some probably a little bit more riskier investments that no doubt, if and when at the time, could have paid off significantly by now. So I would have probably still been in that what's the word, paralysis, fear mode, and in some respects, probably one of the blockers that I was really facing was how to further the property investment goals, and that was sort of something that I was always quite passionate about. My partner's also in the real estate game, and she's in that sort of prop tech space, and so we're both really quite keen on the real estate angle. But I think back before we started this exercise, that structure that we had in place was a real barrier for us, and being able to sort of revise all of that and help continue. I mean, we're as I say, we're just about to go again, and it's I think just being in that position and having everything in the done the right way now has been a major benefit to us as well. So definitely fear, paralysis, and probably just would have done nothing, and maybe still been sitting here 12 months later talking about it, worried about COVID, how it's going to affect us, and what sort of what impact, or whether or not we're better to keep the money in the bank. And that was the thing, right? Having money sitting in an offset, really doing nothing for you, and your money not working for you, and really sitting on the fence, and probably preventing us from really tapping into opportunities that we could have if we had a little bit more confidence and had the right structure in place like we do now.
It's that fear. It's like with your, career moves, things in business, all of that stuff, that the safe option is comfortable, because keeping the money in the offset account and just socking it away and knowing that there's a buffer there, that's a comfortable option. And sometimes that's the very best possible thing that you can do. But it's when you take the smart risks, like figure out what the risks are, appropriately manage those, and then how much risk is right for you, that's what allows you to play a bigger game, to get better results, to build more momentum. And we see so many people that are just following that strategy, and it's like, yes, it's good, like it's okay, it's not a bad thing to do, but there's just so much more potential. And these days, especially because like property markets, expensive all around Australia. Living a good lifestyle is expensive. Our cost of living is high. That if you want to create that financial freedom and do that, that you need, just buying a property and socking away money in your offset account is unlikely to get you to where you want to be. And even if it does, it means that you've missed a lot of opportunities to get more out of what you've got along the way.
Yeah, I think to your point, one of the biggest things as well is that barrier around lifestyle. And, okay, well, how's this going to affect my lifestyle if I want to go on that trip and I want to do that? And as I said earlier, you can still do that stuff if you've got the right plan in place. But that was a big thing. Oh, well, if I'm going to go and do that, or yeah, we can go and do that, and it's going to cost X amount. It wasn't looking at it from okay, well, how can I, help attain those goals? Yeah. It was right here and now, and I didn't really want it, certain things affecting our lifestyle. And it's quite that whole process. They say you spend your money, you piss it up against the wall, so to speak, in your 20s, and start to probably take it until your early 30s, and probably start to take it a little bit serious in your mid 30s, and then go on from there. And I tell you what, very much. Very much the way it was to a certain extent. So it's just taking things a lot more seriously, and having the plan in place to try and achieve what we want to achieve long term is
I think a lot of people kick themselves for not having started this process sooner. It doesn't matter if you start at 25 or 35. I was just talking to a 25-year-old, and it was the same thing. He's like, I should have done it 3 years ago. I had it in my mind and didn't. I think it's just a natural psychology thing that we're always like, I saw that share when the share price was this, and I saw the property market when the property was this, and then time just goes on, and we remember back to those things and go, shit, why didn't we do that? But we can't take advantage of all the opportunities, but you want to take advantage of some so that you can get things moving. Luke, what do you reckon? What are the situations that you think are most suited to people actually having a financial advisor?
I think sort of high, relative to high income professionals that, again, like myself, are quite time poor and really focused on the day-to-day around what we do, and looking at that, and sort of not necessarily focusing too much on the money aspect. So yeah, definitely. And look, people in general looking to further their goals, and don't necessarily know it all. I think one of the big things for us is that, as I said earlier, I didn't have a great understanding of finance, or my money for that matter, and investing, and that's been a big game changer for us. So I think, based on that, if you're serious about it, then you've just got to be prepared to invest a bit of time to set it all up and get an understanding of it. But then it's fairly straightforward. So
yeah, nice. And for people that are thinking about getting some help with their money, what would be your top sort of tips or advice for them?
Don't be afraid to ask for help, and don't be afraid to pay for it. Quite simply, there's plenty of free information out there. I'm sure there is. I'm not really a great reader, so I know there's a million, a billion odd books out there that you could read to gain a good understanding. But like anything, I love what I do. I'm passionate about my career, and a lot of people are, I guess. And I don't have a lot of time outside of what I do and my everyday life to really, I guess, invest the time. So yeah, certainly don't be afraid to pay for the advice. You quite easily go and pay for a personal trainer, or with the current share economy, pay for a lot of people to pay for anything that certainly alleviates some of the time in your day, and that's been a big thing, and this has certainly done that for us. It's made us don't have to think about it, and ultimately it's freed up a bit of time where we've got the right professionals and the right advice to help progress this plan and work towards sort of that financial freedom aspect.
And also you get to take your place as the CFO and outsource some of the management of stuff, like the grunt work to other people. So you're not spinning your wheels trying to figure out what the options are. You're just looking at the options and going, oh yeah, I like this one. I need to know a bit more about this one, and this one's not right for me. Yeah. And I think that's especially for time poor people, which is pretty much everybody, that it's just so frustrating when you start trying to research things that you don't understand well enough to know how to interpret what it is that you're looking at. And then it's just this constant, that over analysis, don't want to do the wrong thing again. It's all tied together. But I think you bang on there. Mate, my last question for you is, if you could go back to your 21-year-old self and give them one piece of money advice, what would it be?
Buy more property and buy well and never sell. Quite simply, certainly having been that 21-year-old and living in Auckland, and being offered property when it was $150,000, and it's obviously no dissimilar to shares and looking at what that would cost you in today's value, and that would have been a big one, and just be a lot more wise, and certainly had a lot of fun traveling and stuff over the years, and wouldn't change any of that for the world. But certainly would have wished I'd put a lot more money away, and that would be the advice I'd probably give my 21-year-old self: invest and buy shares.
The power of time and money is a wonderful thing, and the sooner you can put yourself in a position to take action, the sooner you start building that momentum. But look, I think everybody feels that way, that they wish they'd started sooner, and seeing it come together for you has been great. Really solid foundation, and pumped for what's coming up. But mate, thank you so much for sharing your story. Really appreciate your time. I know you got plenty in your plate, as you said, but man, so much gold there. So really appreciate it.
Yeah, good stuff. Thanks again, Ben. Really appreciate the chat.
Cheers, team.